Then start from Sweden.
And sectoral stock performance. So we have used here Excel and R for showing comparison, and I have used R for whole analysis, data cleaning, and visualizations. So here the whole project is about, and what are the data sets we have been used. All the data sets have been downloaded from NSC. I have downloaded India VIX, Nifty, Gold, Silver, Infosys, HDFC, and these are the things which we have found, like what we want to do analysis in this presentation. So reverse linkage between India VIX and Nifty. India VIX is nothing but how much the market is faring, and Nifty is what is our stock market and how the prices goes on, and how is the stability of gold versus silver. Like this says which is more stable, gold or silver, which is like more volatility, and how the prices have been changed. So this will be discussed with this. And sectoral behavior of IT versus banking. Example of comparison between Infosys and HDFC, and day-to-day volatility and cross correlations. So this is the standardized method which I followed. Took the data, clean stats, comparison, and visualizations. Everything was generated from the R language. So these are some of the numbers which I have found, which I have took from the analysis. So this 45% is the India VIX. Like this is how the market has been bleeded. If you see how much, if you compare it with Nifty, so this is the the market is faring from this, and this is like daily deviation in Nifty 50. Yes, sir. 1.2%. And yeah, standard deviation. And this is the gold, how it moves, and like what are the prices of the gold. And this is about silver, how the price has been changed, and it has increased 8.7%, which compared to gold, it is like more return have been given from silver. And this is Infosys, and this is HDFC. Both movement was very similar. If we what I have found from the 3 months analysis.
These two.
Yes, sir. These two. Infosys and HDFC. And this is the volatility and sentiment, like how the market has been behaving from the past 3 months. If you see, as we discussed before, VIX has climbed 45%, means the fear rose sharply. Like more uncertainty has been happening in the market with normal stability with compared to Nifty. So the correlation is minus 0.1, means it is moving inversely. They are not positively moving each other. So this has been found out from my analysis. Strongly inverse linkage. And this is how the gold and silver behaved. This is comparative analysis. And here, if you see, gold rose modestly, silver, as we can see, the silver is more giving, like it was moving aggressively with comparison with gold. Silver daily volatility is 3.9%, and it is, as we compare with gold, it is like very high, volatility is also very high, and the returns also very high. And if you see, the 0.93 is the correlation between each other. So both are moving in a positive direction, if you see for the gold and silver. So this is some of the insights what I have driven from my analysis. And I took a tech company and a bank company. So like many of us will believe that like where we have to invest in IT sector, like which is more volatile, or bank which is not that much volatile. So here, from my analysis, what we observe is the bank were moving somewhat safely with compared to IT companies. So it shows like both banking shows higher sensitivity to broad market drawdowns like compared to Infosys. Like both have same movement, but like the changeover period is like very much similar, and both are in like positive correlation. Like both are moving together. This is like this comparison says like both are moving together, and there doesn't have much difference with each other. The volatility is not that much same. Both stocks fell 16%. Like equally they got hit in the market.
But there are periods when they are.
Yes, sir.
There are periods when they are this. They are not in sync.
Yes, sir. And I normalized to 100. Yes, sir. I have changed the data set to compare. Change to normalize. Change the pricing into 100. Like a base, I put as 100. Yes. And this is the cross asset correlation returns. As I said, like this shows how they are like moving together or not moving together. This is the major insight we can find out with this analysis. Like these are the, if you see the matrix, VIX and Nifty 0.81%. This like both are, if correlation is nothing but +1 and -1. Like if the two stocks are not moving together, then it will come to the minus thing. So that like they are very inversely proportional. So one grows, one decreases. Another one grows, another one decreases. Like if the correlation is positive, then we can say like both are moving together. This was the some of the insights which I have drawn with my analysis, and we can say some of the points here. Like IT is more idiocentric mover, and near lockstep previous measure. Like these are like like what we can say, small movements have been happening between two assets. So this is how the map works in correlation of derivatives. And these are some of the insights I have drawn, like very small insights. Like volatility climbed, the board index dropped, and large cap stocks sold often together. A classic risk fever thing. So like as we said, our 45 India which is showing 45% leakage. So many of the stocks are moving very like uncertainty have been happened in past 3 months, and sector sensitivity differs. Like HDFC Bank tracked Nifty almost like if you can say like largely stock driven. Like there were not much difference between IT and banking sector. They were both moving in a similar direction, and commodities held up. Like both metals ended in a positive, while silver was the largest community. Like most of the commodity, like where people were traded and they write profits.
Can you do another assessment? Can you just take a note here?
Yes.
I'll take maybe later. So do run a correlation regression of Bank Nifty versus Nifty. And then run for all the banks versus Nifty. So Bank Nifty versus Nifty, Bank versus Nifty for large people. I will give you the data sets. I have a downloadable data set. So we can do for the last 15 years. It's all comes in CSV file. Okay. Downloadable. So you just have to import it. This one. Can you go back to the previous slide? Yes. This one. India VIX, this one.
Yes.
So how do I read this?
So like we have to read it cross-sectionally, like gold in India, VIX, Nifty and
Correct. Yes. So if I read
here you can read it from here to top.
this one,
Yes. Comparing with each.
Gold with India VIX is negative. Finally, silver with India VIX is minus. This is an important finding. We will run some research reports. This is Infi versus India VIX. We will ignore that. This is Bank versus VIX. We will run that later on. Anyways, if you run an analysis between Bank and Nifty, so we know what is the relationship with India VIX. This we will run. Which one? Gold and silver with
India VIX.
India VIX, which is Nifty essentially. So Nifty is gold, silver. So gold and silver with let's run it with Nifty. I think you have already run. So these details are already available.
So in Excel I have mentioned like everything, like proper tables, everything.
This has a low correlation. Gold and silver. We have a positive relationship.
Yes.
Can we investigate for larger period of time?
Yes, very
Pre-COVID, post.
So like very 3 months, very small data set I have been used. Like time period was very less.
Data I have
21 and
20 years. I can give you 100 years of data. Nifty is not there.
That's it.
Nifty.